Though many of the risks we face in retirement are the same for both men and women, women do face some unique challenges as they get older. The Society of Actuaries recently released a report titled The Impact of Retirement Risk on Women. In that report, the authors note 5 types of risk that are likely to be more challenging for women. So writes Mike Wilson, who is president of Integrity Financial Planning, and he is my guest here. Welcome, Mike.
Thank you very much, Scott. Appreciate it.
So women and men share a lot of similarities when they're thinking about retirement, planning for retirement. How are women different? Let's talk about outliving their assets, which is something that I think in these days everybody is afraid of.
Sure, yep, absolutely. Well, statistically, we know women tend to live longer than men. So you could say that on the one hand, it's a blessing from God that they live longer, but on the other hand, that also means that they have extra years of living expenses that they need to support themselves financially. And oftentimes those last few years of life can be the most expensive as well. Mm-hmm. And so women, in many respects, particularly married women, face some unusual challenges financially because of those longer lifespans.
And because of these longer lifespans, that seems to affect a lot of different areas. I guess that would mean then one of the other factors here is chronic disability. If you end up living longer, the chances of you having a long disability are a lot better, right? Right,
yep. Statistics also, bear that out as well, that women are more likely to be alone in old age because they do live longer, and because they are alone, they probably won't have as many family members available as caregivers, to potentially serve as caregivers. So we find that they also, in addition to living longer and maybe having been the one to provide caregiving for, say, their husbands or for an aging parent, mm-hmm. when women themselves reach those later years, they find themselves alone. They have fewer family resources, and so the financial burden then becomes even greater for taking care of those long-term care expenses.
Would it be correct then to assume that if they're living longer, they're probably statistically a little healthier than men? How does that compare with their health care and medical expenses overall?
Well, usually what you find is there have been studies showing that, healthcare expenses for a couple, say age 65, that over their retirement years they could wind up spending $250,000 in expenses, out-of-pocket expenses. Nursing home costs can run, depending on the area of the country you're in, can easily run, $70,000 a year or more. And again, because women are more likely, they're living longer, therefore they're more likely to encounter some type of chronic disability, and then therefore they're more likely to need some type of assistance, and probably that's going to be in a long-term care facility.
And one of the other risks here mentioned in this study was inflation. Talk about how that particularly affects women.
Mm-hmm. Well, inflation is kind of a sneaky one because a lot of times, we don't see big jumps in inflation from year to year. Mm-hmm. And again, inflation compounds just as our investments compound. We like higher rates of returns in our investments. But, inflation, because it's so persistent from year to year, you have an extra 3 to 4 years of inflation on to the end of someone's life. Mm-hmm. And, that's another 3 or 4 years of inflation compounding. And again, it's coming at the time most likely when medical costs and expenses are going to be their highest, and not to mention, the normal inflation rate might be 3.5%. Medical inflation, seems to run more in the area of like say 6% or so. So it's kind of the unknown or unwatched assailant that can certainly strike, slowly over time.
So with all this information in front of you then how do you tailor retirement plans for your clients now, men versus women, and has this changed anything, and what ideas do you bring to the table?
Mm-hmm. Well, particularly let's talk about for married women who are not retired yet. One of the primary discussions to have with their spouse, with their advisor is, mm-hmm. What age to start Social Security. And, the conventional wisdom now for married couples is for husbands to, in particular, assuming they're the higher earners, to start Social Security at age 65. And, again, because women are more likely, they're living longer, they have fewer family resources, and so the financial burden then becomes even greater for the long-term care facility. wage earner, which, if you look at the statistics in Social Security database, that tends to be true. But since they are the higher earners, so for men, if they can delay starting their Social Security benefits as long as possible, say ideally at least until normal retirement age and perhaps even beyond that, then when the husband eventually does pass on, assuming he passes on first, the spouse, the wife, can then jump over to his benefit. And, by having delayed at that point, she, in essence, gets a greater benefit for the remainder of her life. Whereas, if he starts earlier, say around age 62, there's, that's it's about a 25% reduction in his benefit. And so then, and that benefit is permanently reduced, throughout his life. So then, again, same scenario, assume he passes away first, 10, 15, 20 years later. The wife then takes over his benefit, but she's now taking it over at that, reduced rate as well. So whenever it's possible, I encourage particularly married couples, have those discussions before they start their Social Security benefits. If they need some type of income in their early 60s, go ahead and start the wife's, assuming she's the lower wage earner, but let the husband delay, as long as possible.
And finally, talk about in the last minute here, maybe the types of products that you're looking at. I mean, when you're looking at the overall investment mix here, as people get closer to retirement, types of products that you're looking at or perhaps considering as part of a potential income distribution plan. Well,
certainly immediate annuities, come into play. The downside to them, unfortunately, in a lot of cases is that they, don't adjust for inflation, though you can buy riders that will adjust for that. But, in terms of guaranteeing lifetime income, Social Security does that, and annuities are pretty much the only other option out there. So, for women who are concerned about outliving their resources, an immediate annuity makes a lot of sense. On the healthcare side, some type of long-term care insurance. Again, for assuming women are going to experience some type of chronic disability, long-term disability, then and they're going to be on their own, then some type of long-term care insurance I think can help address that financial risk.
Mike Wilson is my guest once again. He's president of Integrity Financial Planning. Can you give us just a little thumbnail sketch of your firm?
Yes, yeah. I'm just a small shop. I run a fee-only financial planning firm. Work primarily with pre-retirees and retirees, and I try to maximize people's retirement readiness.
Sounds like a great idea, Mike. Thanks for your time.
You're welcome, Scott. Thank you.
This is Scott Drake. You're watching Annuity News Now.